am we are recording this, so share with your friends, share with your own alumni circles. But I have the honor of working at SECU and overseeing university partnerships. And so this is our first time doing this with the Alumni Association. We hope to do many more. Thank you for kind of, taking your Friday morning and being a part of this. So I'm going to kick it off. So today you are so lucky because you're getting Tristina, who is one of my favorite colleagues and also just truly an amazing resource as it relates to financial wellness and your financial well-being. If you need anything, you can chat us. This is a very, very low-key session. Just write your questions. If you have a personal question and you don't want to write it in the chat, that's fine too. Email us at any time. But why is CQ here and what is CQ? The first thing I'm going to ask is if you are a CQ member, go ahead and put your just say, yes, I'm a CQ member in your chat. We don't discriminate. We love non-CQ members too. But if you are a CQ member, we are going to be giving away some prizes on this. So I'll be doing a random generator and I will ask you for your email address and then we will send it. It's going to be a digital gift card. But anyway, if you are a CQ member, thank you for your membership. We love you. If you are not a CQ member, consider joining. You're a member for life just
Hey,
because.
Lynn.
Yes, we've got some CQ members. Just solely because you are a Maryland alum, you have access to our wide variety of products and services. So real quick, what is CQ? CQ is Maryland's largest credit union. And what do we do? What do we do? So we don't have, we don't have a board. We don't have, I'm sorry, we
We're
don't
not
have,
profit.
yeah, we're not
We don't have customers.
We have members and you have a stake in our credit union. You are our board. You are our owners. So what does that mean for you? That means lower rates, fewer fees. We're not going to charge you on things like foreign transaction fees. I know that you all love to travel. You're not going to find all these hidden fees. So consider that. And I'm going to say this, if you're not a CQ member, great, become one. If CQ is not the right institution for you, that's okay. Maybe you're a Navy Federal person. Maybe you're a NASA Federal person. We love all credit unions. Also, commercial banks can offer you different things as well. So we're not here to say CQ is better. It's just a different experience. We want to just quickly talk about the Virtual Financial Center where you will find Tristina. This is a best kept secret at CQ. We do not do enough marketing around it. It is open till 8 p.m. You never actually have to go into a branch. So I just want to make sure everybody knows about that. You actually get to talk to a live person on a Zoom call. You can schedule it from your desk. You can schedule it from your couch. When I'm talking to students, I'm always like, you can wear your sweats. You don't have to drive. So best kept secret. In my follow-up note, I will make sure you all know how to access the Virtual Financial Center. It is cool, Charmaine. So definitely check it out. We are here to serve you. We want to make sure that we are giving you a great experience. So that is my favorite thing about CQ. Just want to also shameless plug. We just launched our TERP debit card this year. I know you all are fans of being TERP. So if you open a checking account with us today, you can get this, you can pick the script or the M, whichever one you want. And also you get 20% off of your Terps gear on umterps.com, concessions and merch if you all go to games, no foreign transaction fees, and some local deals. We're trying to do some partnerships with local vendors in the College Park area. And I also just want to say, you get $350 if you join today. And so that's $350 deposited into your checking account. Now, there are some stipulations, of course. You do need to sign up for e-statements, but that's an easy solve. And we do require 2 direct deposits. Okay, so questions, me and Tristina are here to help you. But really, why are we here today? So I am now going to pass it over to Tristina. Ask your questions in the chat. We will reserve the end for questions. We're going to give about 10 minutes for questions. And we'll go from there. And so, Tristina, I'm on mute now.
Thank you so much, Annie. And you're my favorite person. You can all tell that Annie is awesome at what she does. And I'm so excited to spend this time with you to go over this presentation that we have. So why does it matter, right? We're talking about owning your future financially. Why does it matter? 64% of Americans live paycheck to paycheck, even those earning over 6 figures, right? 72% of Gen Zers say that they feel stressed about money. 1 in 5 people aged 18 to 29 do not have a credit score, if you can believe that. And nearly 1 in 3 Americans have zero savings for emergencies. Now, your financial future is not just isn't just about something. You don't leave it to chance. Basically, it's what you do, right? You have to take control of it. All right, next slide, please.
Sorry, these animations are causing problems. Let me
It's
see.
all
All right.
good. So what are we learning today? Money 101, right? Master the basics of budgeting, the do's and don'ts. You don't just leave your money to do whatever it does. Otherwise, it'll go. It'll tell you what to do. But if you tell the money where to go, then you're in control, right? So we'll go from piggy banks to portfolios, savings, wealth building, credit confidence, right? Eliminate some of those fears around credit building, how to wisely build credit without being crushed under debt, and unlock your full earning power. All right. So put it in chat. What word comes to mind when you hear money? Let's see. Oh. Power. We have power, opportunity, fun. This is good. This is very positive. Freedom, wealth, time, fun, tool. Yes, I love tool. Security, independence, happiness, lots of money, freedom. Okay, wonderful. Freedom. I love that, right? Freedom, a tool is very, very important, right? Opportunity. When you have money, when you do it right, you can have fun and not feel stressed about it, right? Okay, just a few more and then we'll move on to the next one. Let's see. I think that's it. All right, next slide. So what's a budget? A budget is simply a roadmap of how much money you have to work with and where you want it to go, right? Again, you don't want, if the money comes into your paycheck, you don't tell it what to do. That's where impulse buying goes. That's where you cannot account for anything that's happened to your money. And we don't want that. Governments, companies succeed because they all have budgets. If you want your life to succeed, you have to create a map for it and tell the money, this is where it's going, this is what's happening. That way you can track your spending, right? Make sure that you're living under how much you're making, right? And then how much how much you're saving. Now, if you feel terrible about spending money on fun things, putting it in a budget will eliminate that. Budget is the difference between spending responsibly and overspending, right? And all of that. So you get the idea. Basically, you telling your money what to do before it tells you what it's going to do. All right. So here's a nice formula. 50, 30, 20. 50% goes to your needs, mandatory expenses, your bills, right? All that you must pay. And then 30% goes to wants, right? Whatever you want. That was what I was talking about. You don't have to feel bad about your wants if you're spending responsibly. And then 20% goes to savings. You always have to make sure your money is divided in minimum B's. And then if you have debt, then debt repayment makes it into that ratio as well. Next slide. All right. Okay, so here are the basics of making a budget, right? List your income. How much money do you have to work with? And list everything, including gifts from family, every type of income, part-time, full-time, all of it. Determine your current spending. I like to do that by pulling the last 2, 3 bank statements to see what's going where, right? And then list all your expenses. What do you need to buy? What is your regular expenses? What are what you're trying to reward yourself with? All of that. Now, very important, prioritize expenses starting with non-negotiables. Please don't go buy shoes when you have rent to pay or phone bill to pay, don't do it. Then work your way down the priority list. What this means is that you're paying rent, you're paying your utility first before you're going out to do anything fun or going out to excessively eat out. Now, eating out is fun, not if you don't have the money to do so. So that's basically the idea. Next slide.
Don't have all of your money go to DoorDash, right?
Oh no, that's the worst. It pretty much triples whatever you're buying. I mean, if you have the line item for it and you're not overspending what you're making, fine, but it does eat up your money. All right, so best practices, right? Set short and long-term goals. Select a budget method that suits your lifestyle. So I've done it from Excel sheets. Now I'm using apps, right? So there's so many apps there. Whatever works for you, if you want to write it down, you can do that. Incorporate self-care into your budget. You don't want to crush yourself by making it non-fun and making it all stringent. Again, it's responsibility. Make savings a priority. So you take care of the necessities, make savings a priority, and track your spending. If you do not track it, I can tell you firsthand, it gets away from you. Right. So these are some tips for successful budgeting.
Stina, what about if your budget lives in your head and you don't write it down? Does that count as a track?
No, that's a deception. That's number one deception. So it cannot live. It has to make it onto a paper, an app, or Excel. Yes. Oh, speaking of, so CQ for our CQ members and even oncoming members, we have an online budgeting tool, right? Here are some of the apps we talked about: Mint, Good Budget, pen and paper, spreadsheets, unlimited resources for you to just sit down and budget. I personally like to reconcile everything Sunday evenings. So if you find, weekly, bi-weekly, monthly, bits work for me weekly, right? So whatever works for you, please do that. It's much easier. Anyway, I find. Next one.
I'm old school because when I was little, my mom used to do the envelope method. So on Sundays, she would sit, do the envelope method, write out her
Hmm.
budget for the grocery store. And
Hmm.
now I'm really a creature of habit. I'm doing the same thing. So I love
I
that.
love that. I thank you for saying that because I've been wondering about that. I feel like when you take out the money, it hurts more to overspend that. You know what I mean? Well, it helps you. I like that. Really, really like that. Okay, so find money in your budget. This is one of my favorite slides, right? Cut costs and keep money. Small changes can add up. DoorDash. DoorDash is not even shy about taking your money, right? So reducing your DoorDash orders from 3, 5 times a week to once a week or once every 2 weeks, you know what I mean? Subscriptions. Please review and see what you're not using. Local library, utilize those, right? Free courses, coupons, and reward programs. I love it. I'm a Food Lion girl because I love their coupons. I've made $100 back in coupons. So please use that. Clothing resale, right? Look into all the avenues, marketplace. If you're not using something and it's sitting around, please sell it. Scholarships, education. Look into our CQ scholarships, either for yourself, even we have one for businesses now, or for your wards, right? Look into those. If you are, doing your nails and other things and coffee, such and such and such that sneak up on you, you might want to review. Again, if you can afford it, that's fine. But if you cannot, these are some of the things that sneak up on you. Yes, and please feel free to keep dropping those tips that work for you. I see discovered a lot of free stuff at the library, like free. Oh, look at that. Language learning. See, check the chat out. Next slide. Poshmark, yeah. Mm-hmm.
Someone also just asked if you're local, there's a place called Uptown Cheapskate. It's a
I've
really
heard of
good
it.
place to
Mhm.
look for clothes and also sell your clothes. So think about that. Look, and one of my favorite things about working with students is and young people is they are so thrifty. I'm an elder millennial, okay? I am not thrifty. I'm like, I'm going to Starbucks every day. They have taught me so much about how to save and why I should save and what's healthy for me, right? Like I don't want to go
Mm-hmm.
to Starbucks every day and have a
Yeah.
huge thing. So make my coffee at
Yeah.
home.
Mm-hmm. Yep, absolutely. It makes such a difference. I was just thinking about this, Annie. When I my coffee that I buy from Wegmans, their brand, right? The huge one costs under $10. And when I'm buying, I'm like, oh. But then I'm like, wait a minute. Starbucks gives you like basically 1.5 cups for that. So yeah, some of these things can sneak up on you.
Also,
Yeah.
the rewards, like if you are a Starbucks person, maybe you need that Starbucks. Like Trustina's saying, if you have it in your line item, do it. My favorite, make sure you're on their rewards programs. And then don't forget, you might have a free coffee. So it could be a little treat for you. And I love it. Also, your credit card rewards, we'll get into credit cards in a minute, but
Mhm.
that is how rich people get rich. They're
Yes.
they're very frugal. Okay.
Hmm. Hmm. Yep. Yes, here's a snapshot of some of the tools you see on our website for budgeting. All right, next slide, please. All right, so banking must-haves, right? A checking account, your everyday money hub. You use for daily transactions, paying bills, shopping, direct deposits. You get a debit card, you have access to bill pay and unlimited transactions. Best practice, keep only what's needed for monthly expenses to avoid overdrafts while maximizing interest in savings, right? Most checking accounts will not give you that much money back as far as interest go. So instead of keeping all of your money in your checking, you want to keep what, and that helps with your budgeting too, right? You want to keep what you need for the month in there and keep the rest in, let's say, a savings or a CD. Next is savings account. It helps you set aside money for future goals and emergencies. Key features: higher interest than checking, right? And you can automate transfers from checking and use a high yield savings account to grow funds like money market or CD. I have a certain amount coming out of my paycheck every pay period going into my savings. I don't have to think about it, something small enough that I will not miss, but then it adds up, right? Your credit card, your financial reputation builder. What's the purpose of a credit card? It helps build a strong credit score, gives you access to borrowing power, and manage short-term needs. It's a revolving credit, interest rates, potential rewards, right? Keep utilization below 30 and pay on time and avoid carrying high interest balances. Really, if you're paying it down, I always tell, whenever I do the student credit cards, I always tell them, you don't spend your credit card unless you have the money to pay it back, right? That's how you avoid the debt. Thank you so much. Next slide. All righty.
Well,
So,
sorry, one quick thing about credit cards. Trustina, do you think you should make the payment before your statement balance each month, or should you make the payment when your statement balance comes in? Don't be too early to pay your credit card because you want to also show that credit utilization.
yep. You want to show it. Otherwise, it's going to show any good point, excellent point. Because I've seen this happen for one of my members that we couldn't lend to. They were paying way too fast. And it was showing on their credit like it was not being used. And that doesn't help either. So it's a game. Yeah.
It is a game. It's a credit game. Sorry.
Yes. All right. So 70 pivoting, 70% of retirees would give one piece of advice to their younger selves. Start saving earlier. Hmm? It's always helpful. All right. Where can you put your savings? Several options. Traditional savings, easy accessible. This is where I would keep your emergency funds or something, but to be able to assess when you need, right? Money markets, high interest savings with flexible access. Ours has a minimum 2,000 deposit. Typically, it earns you a little bit more. Right now, they're kind of like on the same level. Certificates of deposit, one of my favorite types of savings. So it has competitive rate savings. It's a competitive rate savings account, best for long-term savings. So funds are held for a set period of time. So it could range from 3 months all the way to 5 years, right? One of my favorite ones for continuous savings is what we call the add-on CD. I don't know if other institutions offer this one, but this is pretty much something good for you, good for your children. When you started with $100, it goes on for a year. You cannot withdraw. However, you can keep adding to it. So when I say my money goes out of my paycheck, that's what I mean. Yeah. So there are different kinds of that as well. Next slide. Let's see.
One thing I just want to call out, I like to make sure we're really transparent.
Yeah.
CQ and credit unions are typically not going to have your most competitive money market rates. That's where you might be able to find a more competitive rate with a Capital One,
Mhm.
okay? But
Yep.
you're not going to find a better CD rate, okay?
No.
And the deposit of a money market is usually higher than a CD, so the risk is less.
Yep.
Here's
Mhm.
our current CD offer, Tristina.
Oh, yes. Isn't that beautiful? So our 6 months is currently offering 4.25 APY and then 9 months 4.15 APY. Please, please, please contact us. We will put the virtual financial center link in chat or in the wrap up information for you. Please set up an appointment, visit a branch, or just sign up and talk to us, right? And let's see what's best for you, whether or not you're a member. Emergency funds. Why does it matter? Life happens. Unexpected car repairs, vet bills, job changes, anything could happen. Without savings, many turn to high interest debt to stay afloat, right? Emergency funds, peace of mind, financial freedom. That's what it offers you. You don't have to go scrambling and taking any old terrible loan terms because you're in need, right? How much should you save? Start a goal. A simple 500 to 1,000 sitting right there. Once you're in a good position, you want to full set up your fully funded emergency fund, right? That is 3 to 6 months of essential expenses, right? Where should you keep it? Please separate it from your checking, right? To avoid easy spending, keep that in your high yield savings or money market accounts, right? That way you can access it. This is not one for CD. CD is for long term. Right. Okay. All right. So yeah, put some blockades there. It's not too easy to access.
I would
Nice.
also just add on the emergency fund right now, just with the economic uncertainty of tariffs, and we don't know what's happening, and this is going to go up and this might not go up. I would even say safety net should be 6 to 12 months and keep that in your traditional savings account, like Trustina mentioned earlier. You don't want to you want to have liquid in case you lose that job, in case you lose that contract, God forbid, right? So just
Yep.
wanted to chime in on that.
Thank you, Sunny. Set up weekly or monthly transfers. Treat savings like a bill you pay yourself. See, that makes it so easier. My tip is that you don't have to put a whole bunch of money aside that you feel like you'll be tight and then you'll go to withdraw. Find an amount that you will not be tempted to go back and take. That's what works for me. All right. So, yes, transfers. Credit card versus debit card. So what's the difference, right? Debit card, safe to play for everyday expenses. Best for regular purchases, grocery, gas, dining. Avoid debt. Keep spending in check. The pros, no interest, directly linked to your account, helps manage budget in real time, right? However, it does not build credit. What does a credit card do for you? It's a strategic tool when used wisely. Cannot stress that enough. It's best for large or online purchases, right? For safety too. It builds credit, offers fraud protection right there, and may provide cashback or rewards. The cons is high interest rate if you don't pay it in full and risk of overspending. I tell you, when it's not your money, and you're not paying attention, you will swipe. So yeah, please watch out.
Christina, what happens when you get your credit card in the mail and then a piece of paper comes and it has a pin on it? What is that
So
pin used for?
good point. So that is when you want to, that pin is used for cash advances, right? If you ever needed to, what is it used for?
I'm saying don't use don't ever get a cash
Oh, right,
advance.
exactly. Yeah, yeah.
Sorry,
No,
cash advance
I was
equals
like, wait a
bad. No,
minute.
no,
Okay, no,
you're
no,
right.
that's good. That's good. But to Annie's point, please, please, please avoid cash advances. That's a huge sign that you are overspending what you're making. And the interest rates and the penalties are atrocious. So please avoid those.
Didn't mean to
Shred
scare
that
you
pin.
there.
Yes. That scared them a little bit. What is interest APY? Interest earned, that is interest returned to you, annual percentage yield, right? Interest is money earned through your savings. See, so when you put money in the bank, the financial institution does business with it and then brings you dividends. That's what basically the APY is. Now, compound interest. Think about CDs. When you earn interest on both the money you save and the interest you earn. So let's say you're keeping a savings account or a CD. As the interest is being deposited back on the principal for you, it compounds by allowing you to earn interest on your original principal plus the interest that is there. That is a miracle worker when it comes to growing your money, right? If you set aside 100 at the age of 14 and you have about, you'd have about 23K at the age of 65. However, if you begin saving at 35, you'd have 7K. The magic of compound interest.
It is magic. And if you have kids, if you think you're going to have kids one day, start opening CDs, 529s, IRAs for them early on, because that is the key to generational wealth.
Mm-hmm, mm-hmm.
And it doesn't have to be $1 million. It can be $1,000 or $500, and it will just build and build.
It adds up. I love it, I tell you. So interest rates on the other side, APR and fees, are what you pay when you borrow money. Could be a loan, could be a credit card. So it matters. Credit card rates range from 15 to 25% plus APR, annual percentage rate. Loans and mortgages vary. Please shop for the best deal or the lowest. And if you don't find it at SECU, shop for it elsewhere because we want your financial well-being. Hidden fees to watch out for, which you typically will not have to worry about with a credit union. Late payment fees, $30 to $40 per missed payment. That is crazy. Overdraft fees. See, this is where you want to watch your spending, right? If you, anyway, it's right there. Annual fees on some credit cards. We never charge annual fees. So please watch out for those. A lot of the commercial bank credit cards do have those. Always check the APR, not just the minimum payment. You know, I hate when dealerships ask, what payment are you comfortable with? That's a trick to say, forget about or don't pay attention to the interest rate. Just tell me what you're comfortable paying. What if you're charging me 20%? Please always look out for the APR. Debt repayment strategy. So it's common, right? In the economic system. If you have debt and you're looking to pay it off, consider one of these. The snowball method. I like that one. So list all of your debt from smallest to largest and pay off the smallest debt first. When you pay it off, you're going to add whatever, and as you're paying the smallest one, paying extra payments on the smallest one, you're making minimum required payment on everything else. Now, once you get rid of that one, you're going to have the minimum payment and every other payment that you had that you were using to pay the small one, add it and then apply that to the next smallest. And that's hence the term snowball. So as you go, your payment power becomes larger, right? That you can throw at it. Now, avalanche method deals with paying the debts with the highest interest first. So list them. You basically have to list everything and then pick off the one that is costing you the most and pay that off. That one takes the lion's heart because you may, if especially if you have a large balance on that one, you may be paying for a while before you can see that account disappear. But whatever works for you, please go for it. All right. What if you're struggling with debt? Nearly 3 out of 4 Americans say they feel stressed about money, right? Part of why I was so happy when we asked what comes to mind about money. Most everything was positive. I was like, what a great group, right? But this is the reality. 3 out of 4 Americans say they feel stressed about money. And 43% of US adults carry credit card debt month to month. So that's the reality. Now, if you're struggling with debt, please list them. I've heard people say, I don't want to face it. I can't even, you know what I mean? Don't avoid it. Face it head on. List them all, list the balances, list interest, minimum payments, and choose a plan, snowball or avalanche, right? set up automatic minimum payments to protect your score. Please do that, because then you're forgetting to pay. If you forget to pay, you're incurring late fees and it just makes matters worse. So please set up auto pay. Call your lender, contact SECU. We'll talk to you about our debt consolidation plans. You know what I mean? Yeah, get help. And then we also partner with Green Path, that who are amazing, are helping our members whose situation is a little bit too far gone for the members to be able to help themselves, right? This hope is never lost. Absolutely love, love, love Green Path.
If you know you're going to miss a payment, I can't speak to call your lender. If you're nervous, don't run from it. Have a conversation. They can work with you. It may not be ideal. It may not be exactly what you're looking for. They obviously can't erase your debt, but they can get you on a payment plan that helps. So you have to be an advocate for yourself. Then I
Yeah.
just want to plug GreenPath one more time. Another benefit of joining a credit union, we want our members to be financially in good shape, right? We don't want people to or a credit union or a bank doesn't want to have to take somebody's car, right? We want to work with you. We want you to have your car. So don't run from it. Green Path is a great resource.
Thank you so much. And we also have those programs where they could put the payment behind, something can be worked out. So don't shy away from that. So the benefits of credit counseling, right? Financial education, learn budgeting, savings, and spending. This is all about Green Path, right? Stress reduction, credit score improvement, debt management, personalized advice, breathe, avoid bankruptcy. Huge resource there for you.
And I just also, before we get into credit, CQ usually has, or with our TERP credit card or most of our credit cards, we have a 0% Visa balance transfer. There are tricks and tips that your financial institution should be presenting you with. Say you have a Discover card, great. They have some great products. If you have a high interest over there and you want to join CQ or you want to join another financial institution, consider taking that credit card and moving it to a different with a 0%. Okay. That is a great way to pay down your debt.
Mm-hmm. Good point. Absolutely good point. Why does credit matter? It affects your ability to rent, borrow, open accounts, and even get a job. Sometimes, well, these days, insurance, phone companies, so it's good to have it. Now, some employers and landlords do check your credit. You know what? That's an excellent point. Yes, landlords do check your credit as part of their decision process. Basically, your financial credibility. So you want to build it, right? Yep, pretty much everything. A credit score is a numerical prediction of your credit spending or credit or spending behavior, right? It rises from 300 to 850, aka your loan worthiness. The higher the score, the better a borrower looks to lenders. So when your score is low, you pay a lot of interest. It just costs more, right? All right. So how is it calculated? New credit contributes to 10%, credit mix 10%, length of history 15%, payment history is big, right? So that is 35%. So it goes back. Please don't miss payments. Not only will you be paying fees, you'll also be damaging your score, right? Credit utilization. Please pay attention to that and know that you should not be going over 30% utilization so that you can keep your credit better. Again, if it's low, it just costs you money. You pay a lot of money. How to check your score? You are entitled to one free report for is it per year, right? Per year. From
Not per week, per year. I have to edit that.
That'd be lovely. From your annual creditreport.com, right? You have tools that monitor your credit and gives you simulated scores. That is pretty close to what the actual score will be. So aside the one that you're entitled to, our CQ app now has a tool that gives you your score. Apps like Credit Karma does that for you, you know. So yeah, keep an eye on it. It'll help you detect if someone is fraudulently opening accounts in your name as well. So please don't avoid checking your credit. Okay. Yeah, 800 plus is excellent. Anything 500 and below is pretty much not great. All
I
righty.
I would just say your credit score doesn't define who you are, right? It's agile. You can do a little competition with yourself. Decide today I'm going to take control of my credit. I'm even if you have a 700 score but you want an 800. Do a little competition with yourself. Can you make it, you know?
Mhm.
It can be changed.
And mhm, to your point, Annie, it's a tool, right? It's a tool. The only thing it speaks to is how much money it's going to cost you if you borrow, right? But that doesn't define you. Yeah. Yeah. So yeah, and we're aware that you kind of get there's no need to feel a certain kind of way. That's why we do financial education, right? No shame, nothing. Hold on, let me see. Nothing like that, right? So let's see. Buying a car, getting a mortgage, renting an apartment, your phone plan. Yes.
Look at the difference between if you have good credit because you're in the 700s, 800s, and you get a 3% APR versus a 10% APR, look at how much more interest you've paid.
Which is, if we, yeah. Oh. So what's one habit that you could tweak today to help your score? Put it in chat. Let's see.
Trustina, we have one question from Bridget who's asking, how do balance transfers work? I've always been confused about what it takes and what it affects.
Okay. Okay, that's an excellent question. So balance transfers mean that, for instance, one that we have over here at SECU is when you open a new credit card with us, we will give you 0% APR. Basically, if you have, let's say, 3 credit cards, you owe a combined balance of 2,500 on them. Each of them is giving you or charging you an interest of between, let's say, 17 to 35%. You want to make it so you can pay off that debt faster. To pay it faster, you want to pay as little interest as possible. Balance transfer does is it takes money available to you from the new credit card to pay off those credit card balances. So what will happen is that the combined 2,000 balance from those 3 credit cards will now be taken and placed on the new card. Why are we doing this? One, to consolidate everything into one place for you so you can track paying it off faster. Number two, balance transfer usually means the new card is not charging you interest. Sometimes there is a one-time fee, like a 3% or 4%, but that is one time, right? But that is nothing compared to the 17 to 35% that you're paying. So basically, it takes the balances from the old cards or loans, places it on a new one that charges you little to nothing. And those the old cards become zero then, right? Did I?
Uh, great,
Can
great.
you-
That's perfect. If you have any additional questions, Bridget, please, I would consider when we send out our follow-up email, make an appointment on our virtual center. Ask these questions, do your research, because these are there for you to help pay down your debt. What's one habit you could tweak today to help your score? Okay, let's see what Albert says. I have a bunch of credit cards with his, oh, no, you should not close those accounts.
No, yeah.
I would say
Good
go buy
question.
some gum at the convenience store and then pay it off. Go
Mhm.
fill up your car with some gas and then pay it off. Little tiny purchases. Do not close the credit cards. Um,
Yep.
Make
Okay.
on-time payments. Yes,
Yes.
consistently. That is the best
Mhm.
way. Yeah.
Yep. Mhm.
Use your card, pay it off.
Yep.
Use, pay.
Mhm.
Diversify your loans. So Tristina talked about this on a previous slide about credit mix. So make sure maybe you have an auto loan, a student loan, a credit card. It can't all just be personal lines of credit, right? So make sure you're really getting different things. Um, Okay. All right. Thank you all. All right, we have about 5 more minutes and then we're going to break into some questions. So
Yay.
Trustina, I know I need more title slides in between each of these like switches. I'm sorry. Oh,
No, it's okay.
unlimited cable. I love that.
Cable?
Yes, you do not need to be paying for cable. And also look at the
No,
streaming
I haven't.
services. If
I
you
tell
have
you,
6 streaming services, you don't need
that's a
cable.
lot. All right. So, know your worth, right? Make the most of your income. Please research average salaries for your role, right? And then don't be afraid to negotiate. If you need to move, move, right? When don't be afraid to negotiate when starting a new job. Ask about raises, promotions, and career pathways, right? Please, please, please. If you need to get a mentor within to show you how to grow, please do that so that you're maximizing. Look beyond your paychecks, right? Paycheck, health insurance, retirement match, paid time off, tuition reimbursement, wellness perks. These are all things you should look for when you're looking at employment, right? Build your skills. Start side gigs. I'm the queen of side gigs.
Trustina, Trustina never stops learning. She has an incredible, she's an artist. Okay. So I
Thank
want
you,
to
Abby.
plug this. Trustina is financial, uh, a guru by day, artist by weekends, evenings. Your job that you go to every day may not be fulfilling these pieces of passion that you have in your life, right?
Mhm.
Maybe it does, and that's amazing if it does. If it doesn't, what else is going to help, right? We talked about buying and selling clothing. Maybe you're really good at marketing your clothes and you want to do an Instagram, business there. Find what's
Mhm.
going to make some extra income and fulfill that
Mhm.
love and that desire.
Yep. That is really true. Is it worth keeping, Olivia, is it worth keeping a card open if you don't really like it, or just to keep higher credit limits and age, or does the number of lines of credit negatively? So with this, and Annie, correct me, right, if I'm wrong. My opinion is you could eventually transition, but wait till you have one that you like for a year, couple years before you shut one down. If it's not bothering you, I would keep it. If it's not costing you annual fees and all of that, I would keep it. But if you really don't like it, I would transition strategically. Real life readiness. Um, your paycheck, right? Um, Gross versus net pay. Look at your pay, how much is coming in, look at your deductions, right? Taxes, social security, Medicare, insurance, premium, and make sure you're taking out appropriate taxes, right? So that it's not weird at the end of the year when you're filing taxes. Direct deposits. It makes savings easier and ensures you get paid on time. You don't have to worry about checks coming in the mail, being stolen, all of that, right? Health insurance, dental vision, time off, other perks. Please take advantage of these, usually provided by your employer, right? Emergency fund. Um, Please, we talked about that. Insurance, renters insurance, car insurance. Some states make it mandatory to pay some of these, but if in case you're in a state that is not mandatory, please, please, please do take advantage of your FSA, HSA account, save pre-tax money for healthcare expenses. I take advantage of that, right? For doctor visits and all of that. Coverage counts. Please know what your coverage counts. It's good.
I got
That's
I
good.
got I got nervous.
No, no, no. It's all good. It's all good. We pretty, yeah, we get the picture. It's all good. Next
And
slide.
I would just say, those FSA, HSAs, if you're going to the store and buying NyQuil because you're sick, eyeglasses, maybe you need a brace because you have carpal tunnel. Those can all be covered under your FSA, HSA. So consider looking into that. That's a great way to save money.
All
And
right.
then somebody asked if, and you kind of already talked about this, Tristina, but somebody asked if closing a credit card hurts your score. You know what? It does. So Tristina said strategically be thoughtful about it. The biggest flex you can have with your credit card is keeping it in a drawer. When you achieve your score that you want, keeping it in a drawer and not using it. You don't need it, right? It's there in case you need it. So, ways to build up your credit score, use it, pay it off. Use it, pay it off. If you are not using a credit card, put it in the drawer. Don't use it. It's fine. If you are paying a yearly maintenance fee, that is not the right product for you. They're already getting so much money off of your interest rate. Listen, I had a student discover card. It's a great product. That one is uh there's no yearly fee. They moved me to a better product as I aged. $90 a year. I'm like, I'm not paying that. So know what you're doing.
Yep.
And just to
So
recap,
yes,
we can, yeah.
yeah, recap that. That's right. Basically, if you're a member and you log in, get our app. You see this tool there. Yep. If you're not a member, we can talk to you. You are welcome.
There we are.
We made
Look at
it.
us. We made it. Okay, so if anybody has questions, so Trustina was kind enough to do this presentation, but she is an expert also. So later on today, we're having presentations for small business owners and entrepreneurs. Just know that Trustina is owns her own business. She is our virtual business member advisor. So she's an expert on setting up your business, implications for best practices. What can you do? She will be an
Mhm,
amazing resource. But she
mhm.
can also help with everyday things if you need it.
Yes.
I'm going to
Mhm,
put her email address in the chat. Of course, we'll be sending this out in our follow-up email, but if
mhm.
anybody needs to get in touch, please do.
Yes. Yep, that's my email. And Annie, I know will include my appointment link as well. So if you wanted to talk to me directly, you're looking to start a business. Really, I help members from personal accounts all the way through to business loans. So happy to talk.
All right, and it looks like Lamont has a question.
Yes.
So I don't know if you're welcome to write it in the chat. And somebody made a great point. Freeze your credit. We didn't even have
Hmm.
time to really talk about that.
Hmm.
Freezing your credit is a wonderful tool. That way, no one can open lines of credit in your name. However, if you know you're going to need money or a loan, so
Release.
you freeze your credit and then your car's check engine light comes on and it's 20 years old and you're like, uh-oh. So you know that you're going to have to get a new car soon. You're going to unfreeze your credit, wait 2 days, about 24, 48 hours. Then you're going to apply for your auto loan. After all of your auto loan is done, you're going to refreeze your credit. If your credit is frozen and an organization, a lender pulls your credit, you will get denied, okay? Unfortunately.
Mhm.
So be smart about freezing your credit. It's an amazing tool. I highly recommend it, especially in 2025.
Yes. Okay, must. Okay, so
You're good.
Lamont is driving. Okay. Oh, thank you, Lamont. Thank you.
Lamon.
Thanks for your
Driving,
question.
okay? I hope that fully mounted. Um, But any other questions, please chat. Let us know. Basically, the key takeaways are track your spending. Where's it going? What's your plan? What's your
Yeah.
financial plan? Are you somebody that wants to retire by 60? Okay. Let's talk about that. You might need to make some aggressive savings goals right now. How are you going to protect yourself from credit pitfalls or debt pitfalls? I'm sure people on here have student loans. So just be smart. That's right.
S-
The
Sign up
only
for
thing I'll
email.
add while we're reading through the chat is utilize your resources, especially young
Mhm.
alums. I feel like I remember not taking advantage of all of the free resources that there are, obviously including today's presentation, and then some of the folks on this call that are willing to meet with you separately to discuss your personal situation. So, don't be afraid to ask questions and claim what's yours and get some of those questions answered.
Mhm.
Absolutely. I did not do any of this when I was a young alum. I had to make some mistakes before I figured out what I was doing. I think the best thing that helped me was making savings automatic. So if anybody is about to start a job or has a new job, when you go in, know your checking routing number and your checking account information and know your savings account information. So when you fill out those direct deposit forms, it's done.
Yep.
Um, yeah. And I would also say read. I know I call all of us skimmers, right? We don't have time to read. Nobody has time to do anything. But this is pretty important, right? Read the fine print. Read the
Yes.
APR. Yeah.
Hmm. That's true. Yeah. Only thing can take away, please budget. If you can do it in bite size, do it. Emergency funds important, so you don't have to fall on credit cards when you are in need or if something were to happen. Any more questions for us?
Okay, so Craig and Michelle were our winners. Thank you for sharing your email addresses. I will be sending out some Shell gas gift cards via email. If you need anything, please don't hesitate to reach out. I'm going to put our CQ landing page in the follow-up. Please check for different offers. We also have a really good auto loan rate right now. So if you're in the market for a new car, or I mean a used car, I would say pre-owned. I don't know if anybody's buying new cars right now with everything that's going on, but yes, consider your options.
And there's a comment here, Smithson, thank you for putting that in there. Maxing your 401k employer contributions. Please look into that and take advantage of that so you can multiply your savings.
You get a bonus from work if you're lucky enough to get a bonus. Great. Take half, put it in an investment product that's going to save you money and build that compound interest.
Yes.
We need to make up a dance for compound interest. Okay. Thank you all so much. Ellie, am I staying on?
Yes, everyone's welcome to stay on for the next session. We'll transition right at 11 o'clock. But if you were just going to attend this session, hopefully you have everything you need to take your next steps with Trustina or Annie or our friends at CQ. So we will take a couple minutes to pause. If you have any final questions, feel free to put it in the chat, but we will start the next session right at 11.
The next
Thank
topic is
you.
your glow up guide to financial success. It will be a little bit different, but it will have some of the same topics. The one after that is it is called Keep Learning, Keep Earning. So really focused on retirement and how to earn make your money work for you. And then our final session is Be the CEO of Your Life in Business. And that's really around small business banking, entrepreneurship, things like that.
I'll drop the link to the full schedule